This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches are surging as Wall Street celebrates a milestone. The S&P 500 climbed 0.58 to finish the day at a record 6,891.40, edging closer to the psychologically significant 7,000 level. The tech-heavy Nasdaq composite led the gains among the major benchmarks, rising 0.79 to close at 24,916.90. The Dow Jones Industrial Average rose 129.47 points, or 0.26, and settled at 49,662.66. After 2 weeks of AI-driven volatility and defensive rotation, tech stocks are finally catching a bid. But the real test comes tomorrow. Nvidia shares advanced 1.6 on the heels of Meta Platforms announcing Tuesday that it's going to use millions of Nvidia's chips in its data center build-out. Similarly, fellow Magnificent Seven member Amazon moved higher by nearly 2 after regulatory filings showed Bill Ackman's Pershing Square grew its stake in the e-commerce giant by 65 during the fourth quarter. Software stocks, which had been crushed for weeks, finally found buyers. Market breadth was notably positive, with the Russell 2000 index of smaller companies also seeing a modest uptick of 0.5, signaling broad participation beyond megacap tech. But the Fed minutes revealed a divided central bank, with some officials suggesting rates should remain restrictive while others see room for cuts if inflation cooperates. Tomorrow brings the earnings everyone is watching. Walmart reports tomorrow, and Deere reports Friday. Both will show whether everyday consumers and farmers are feeling economic relief. Here's what's actually happening. The market is trying to move past the AI disruption panic that dominated February. For 2 weeks, investors sold anything that looked vulnerable to automation, software, logistics, even real estate. But Wednesday's rally suggests that sell-off may have been overdone. About 320 shares in the S&P 500 rose, showing healthy participation across sectors. The Nvidia-Meta partnership proved that AI infrastructure spending isn't dead, it's just shifting. Companies are still investing billions in chips and data centers. They're just being more selective about which software tools they buy. The Russell 2000's gain signals that small and mid-cap stocks, less exposed to AI disruption, continue attracting capital. But the S&P 500's valuation remains near the upper end of its historical range with a forward PE above 22. Leaving little room for error. If you held tech stocks through the recent volatility, Wednesday brought some relief. But the real question is whether this is the start of a sustained rebound or just a bounce before more weakness. Walmart's earnings tomorrow will answer a critical question. Are American consumers still spending, or are they pulling back? If Walmart shows strong sales and raises guidance, that validates the economic recovery story and supports higher stock prices. If they miss, it suggests inflation is still squeezing household budgets and the consumer is weakening. For mortgage shoppers, rates remain attractive with the 10-year Treasury around 4.06. But those rates could rise if the Fed signals it's in no hurry to cut. For savers, high-yield accounts still pay around 5, but those rates will fall once the Fed pivots. Your 401k performance depends heavily on whether this tech rally holds or if defensive rotation resumes. Tomorrow morning at 8:30 a.m., pending home sales data will show whether housing demand is stabilizing or still declining. Then Walmart reports before the open. Watch their same-store sales, inventory levels, and 2026 guidance closely. If they deliver, markets could rally further. If they disappoint, the defensive rotation that dominated early February could return. Deere reports Friday. Farm equipment demand reveals whether rural America is healthy or struggling. Also watch Friday's PCE inflation data and the advanced GDP estimate. If inflation is cooling and growth remains solid, that's the Goldilocks scenario that justifies record stock prices. But if inflation stays sticky or growth disappoints, this rally could stall quickly. The market is at a crossroads. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.